Good afternoon, everybody. Welcome, welcome. Hopefully everyone was able to have a good trading morning so far, and hopefully everyone had a great weekend and got to spend some time with the family and all that fun stuff. You know, by me, it was well, pretty rainy and kind of gross, but not too bad. Overall, before we jump into the markets, we are getting some movement today, luckily enough, even with a complete lack of news. As always, swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. And along with that, in the email, we talk about a bunch of stuff that we don't have time to talk about throughout this live stream and really anything else. And that's going to be everything that's moving of interest, whether it's stocks, cryptos, options, you name it. It'll show up in that Outlook newsletter if you haven't signed up already. Make sure to do so you don't miss any of those. Along with that, click on the live Trading subscription and trial info. From there, you can register for a free 3-day trial in the room. You can hang out with us for a couple days, see what we're all about, see how we trade the market, see how we approach the markets, ask some questions, and just generally have some fun with us throughout the morning. So make sure to do that if you haven't done so already. Drop that down. Let's take a look at the news for tomorrow. Now, the news for tomorrow, and actually we'll go over the news for later today too as well. Out of Australia later this evening at 21:30, we have the RBA meeting minutes, and out of China at 2200 Eastern, we have the industrial production for April. Forecasted at 6.4%, so we do have some news later tonight if you trade those sessions. Tomorrow we have German news at 2 o'clock in the morning. That is going to be the GDP quarter over quarter for quarter one. Say that 5 times fast. Forecasted at 0.4%, previous was 0.6%. Out of the UK at 4:30, we have the average earnings indexes plus bonuses for March forecasted at 2.7%, and the climate count change for April forecasted at 13.3K. At 5 o'clock out of the UK, the inflation report hearings. That can definitely be a big factor in market movement, so make sure to pay attention to that. Also at 5 o'clock out of Germany, we have the ZEW economic sentiment for May, forecasted at negative 8.0, previous was negative 8.2. Finally, to the U.S. news, we do have U.S. news at 8:30, and that's going to be the core retail sales month over month for April and the retail sales month over month for April, forecasted at 0.5% and 0.4% respectively. And then later that evening, tomorrow evening at 19:50 out of Japan, we have the GDP quarter over quarter for quarter one, forecasted flat at 0.0%. Previous was 0.4%. So overall, lots of stuff going on tomorrow. We have a lot of news, and it's news across the board. It's news for every session, whether you're trading the Asian session later tonight, the Australian session later tonight, maybe the Euro session tomorrow morning. Doesn't matter. We got news across the board. Plenty of stuff going on, so make sure to pay attention to that news so you don't accidentally get stuck in that. Nobody likes that. Looking at the charts for today, the Euro is still just kind of rallying back a little bit. We had that original range down here around that 1.19 area, and it really didn't do a whole lot. We held the market in on both sides for a really nice bounce, really back and forth for quite a while until they finally broke out, pulled back to it all in that little wick right there, and then bounced back up, and it's off to races to the upside. Now, is this the bottom of the move? No, right? This is probably not the bottom, but this is a good corrective phase. This is what a lot of sellers want to see, right? Sellers have been selling from, you know, all the way back here on the pullback, correction, pullback, sell them, right? All the way down. We're finally starting to see a corrective phase back, and this is going to be largely on profit taking, but there will be some buyers who are trying to buy, you know, maybe they're trying to buy below 1.2 for a long-term hold. Who knows, right? But we are in an area that is obviously being taken as a profit-taking zone, bouncing the market back. I don't believe the sellers are done, and I think the best that the buyers can really hope for is going into a larger range here, and it wouldn't be a surprise at all to see the market dip back down, and that's actually what is anticipated to happen here. So what I would like to see on this rally to the upside, we're coming back to that 1.2 area, and although I really hate trading around those big hold numbers like that, this is a zone where things start getting interesting. We need to look back at previous market structure, and we can see that this is the zone where it found interest, and we're seeing it again. So even though we have attempted to break out of the highs here, if this fails back down, this could easily be a selling area for the market to roll back over and make its way back down into that earlier range with an objective to the downside at 18,895, right? 18,895 down here. I would like to see the market push down to 18,480, but yeah, it's getting a little bit harder now that we've seen a really big correction to the upside. Chances are, if it does make its way down to the lows, it's going to fail a new low or just poke down to a new low before popping back up again. So we'll kind of have to wait and see what the euro wants to do. But really, this is the area that a lot of sellers are going to be building into. You've got swing highs all over the place inside of here. Not only do you have swing highs, but you also have previous swing lows coming into play, acting as support. You have the big whole number cutting through there. So there's a lot of stuff inside of here. So that's why I want to see them break down first. Preemptively trying to plan out a possible short inside of here, it starts becoming a little bit like throwing darts. You know, which one do you want to pick? That swing high, that swing high? Maybe you have a moving average in here, or maybe you've got a fib inside of there. There's so many different things that it makes it a little bit more difficult. So instead, waiting for a higher probability scenario, seeing the sellers push down, look for the corrective phase, and then sell along with the secondary attempt to drive the market lower into that is kind of what's on the docket right now for the euro. So I'm looking for the euro to push down, but I want to see a little bit of a fade first, see them dip underneath it, come back, hit that resistance, and then push down from there to really give us the cue that the market wants to fall. That's really about it, though. There's no new levels of support or resistance. There's a minor level of support at 19,780, but we're already at the whole number at 1.2, so it's not going to make much of a difference one way or another there. Get that out of the way. Over on gold, gold is really riding the struggle bus right now. It is having a heck of a time getting anything going, let alone a move back below support. They're having a hard time getting outside of the range. They're having a hard time doing anything. We tested the highs of the falling resistance, and that is drawn up from the highs up here. We have A to B, and now we have our C point. That is holding so far. We also have previous resistance at this previous swing low, swing high kind of combo area, and hitting that as a nice rejection. So we are seeing the sellers do have interest here. That is pretty obvious. But the big thing that we need to see is this major support level. I need that out of the way. We've held way too many times here, and if anything, we might be able to adjust it just a little bit down to around 1318.6. But there's still too much stuff in the way. We need to break underneath this level so then we can bounce back, use it as resistance. Very similar situation to the euro in kind of, you know, breaking down, coming back, retesting, and then falling lower, because there's just too much stuff right now. Again, it's like throwing darts. You want that swing high, maybe you want this swing low. How about a 200 period moving average? There's just too many. So instead of trying to, you know, hope that we get the right one, I would rather wait for it to break down, find some level of resistance like a retest of the falling channel at horizontal support or resistance. That would look really nice for a possible turn back lower, breakdown through 13.6, and then we have a run all the way down to 4.2, and that's kind of what I'm waiting for here on gold as well. You know, it's one of those things where it's kind of unfortunate that we have to wait, but at the same time, I think it's the best approach right now to take the safest approach, at least, to finding these sellers coming back in and pushing the market back down again. No new levels of support or resistance. There is a minor level of resistance that has been added at 25.1, but arguably this previous support or resistance is all kind of the same zone anyway, so it's all kind of the same thing. Looking really good to the downside. We just need to see the sellers break down to get us in to, you know, continue the drive. Over on crude oil. Crude oil had a pop up and back down and then up and then back down again, and a lot of back and forth here. And this could be one of two things on crude oil. This could be a situation where we're dealing with more of a flag. Right? We have a big rally to the upside, get a nice little flag there, maybe a continuation breakout to the upside. Could definitely be the case. We do have resistance floating around at 71.51, so there are definitely things to consider there. But then this also could be the fact that we missed the overall range lows, right? We missed that low test down here. Usually when you have that miss of the low test, they're going to double deviate up, which is what we did right here. Now we're missing the highs of the next deviation. Could be a situation where we double deviate down. So we're running into a situation now where one of two things is going to happen. And when we see that candle, whether it's a breakout down or up, that's where we're really going to know where to put the money on, because right now we're kind of in the middle. I don't think anybody's really made up their mind yet. They're probably hedging, building positions, etc. We haven't had the clear sign. So on crude oil, I still have that long-term short bias. I can't help it. But, you know, the big thing that stands out to me is just this big round number at 70. 70 and 80 and 60 and 50 and whatever, they're all going to be magnets. And whenever the market tries to get away from it, it generally gets sucked back. And usually the market's like hanging around these areas for a little while before they start running towards the next location. So to me, I see this as a possible bull flag failure. See them break up, retest those highs, fail, and then turn back down to grab that $70 mark. It might still grind down from here and grab 70 anyway, but that does create an area of interest that I am definitely going to be keeping an eye on at 71.89. A retest above 71.89, maybe up to, you know, 72, just to get a test of the whole number, and then see it coil back down would make a lot of sense right now for the buyers trying to get the bull flag. It traps into the highs, looks like it's going to run, and then starts backing itself down again with more failure to the downside. So I'm watching 71.89 as an area of interest. Of course, we're floating around 71.03. That's been an area of interest for a week or two now. And of course, 70. Really what I want to see is a failure off 71.89, a push up into these highs, a trap into that location, maybe up to 72, dial back down again towards 70, and then fail lower to grab 79.12. And then from there, you know, obviously that's going to be a nice move anyway, but then from there we can see if they want to break down a little bit further. But that's the game plan right now. So looking for a trap on the highs to coil the market back over to 69.12, and then from there we can let them make up their mind, and we'll see what we want to do from that. No new levels of support, small level of resistance being added at 71.51. Obviously the new one that we just added at 71.89 is also going to be an area of interest, so we'll keep an eye on that too. But not much else to really change here on the crude oil market. And then we've got the indexes. The S&P is catching a nice rally to the upside. Most of the indexes are catching a nice rally to the upside. NASDAQ above 7,000 there. And just a lot of good bullishness still continuing. We're finally starting to see a little bit of a pullback. And if we look intra-candle here, we can see that we had a nice rally to the upside, a small little pullback, a tap into those highs, and then a failure. So we're coming off of a minor double top high. Not necessarily that concerning. I mean, you know, it would have been a little bit worse had they made, you know, a really drastic wick trap on the highs and failed down again. This to me is just screaming a larger correction, right? This whole move up has been really aggressive corrections. 1 bar, 1 bar, 1 bar, 1, 1, 1, 1, and now we're going a little bit further. So likely we're just looking for a quick little pullback to support. 22.5 is support, 16 quarter is support. Any of those areas will be utilized as a potential continuation bounce to the upside. I'm not necessarily convinced that it's going to make it all the way back up to the highs, but if it does, a likely upside objective is going to be to retest this wedge top coming across the highs there. Would be a pretty likely location to see buyers want to push towards. Aside from that, this is a buy everything kind of market until we get up to that objective area, and that's going to be the way that I'm treating it. Waiting for a little bit of a larger correction down to 22.5, maybe down to 16.25 would be a little bit nicer. Then you start getting the trap low and a retest of the previous swing high. Looks a little bit nicer there. Might be able to get a little greedy on 16.25 and see if we can wait for it to dip down there. But at the very least, 22.5 is what I'm waiting for at the moment, and we'll see if they can pull back and hit that. Outside of that, though, everything is looking really nice to the upside. Getting a nice corrective phase here, looking really good. Just waiting for the S&P to want to pick it back up and slam the market higher once again to continue this bull trend to the upside. Pretty good. All right. Let's take a look at some of our favorite stocks here. I had a comment on the last YouTube video live stream talking about wanting to look at IQ. So we'll take a look at IQ really quick here. Zoom this all the way out. Take a look at IQ. So IQ obviously is a relatively new stock, and it's always kind of difficult to pin with a new stock what to do, right? That's one of the hardest things when you have a brand new stock, especially if you like trading IPOs. When you're trading the IPO, it's even harder because you literally have nothing else to work with other than what the market is giving you and then some news fundamentals that might be going around. You know, when Tesla goes live or any like big names that have been around for a while, there's a lot of hype around them. IQ is another one that did put in a good amount of volume, but when that IPO launched, it had an initial really bearish turn lower. And that initial bearish turn lower, it's not necessarily that big of a deal. It could just be profit taking on, you know, the traders that have shares already, insiders, if you will, owners of the company, you know, whatever, and they're going to be selling out of it when it starts popping up. Nice little payday for them. But really, after we start getting a couple days of data, you know, a couple months, a couple years, then we start getting more information. For right now, this big bear bar is going to be a lot of information to deal with just by itself. And what I mean by that is because we don't have anything else to work with, we have to start utilizing projections. What do we think the market is going to start doing, and where is it likely going to run into some trouble? So if we use our rectangle here, we'll draw from the low point over here. That was the lowest point that it made to the highs over here, right? This is a arguably first deviation, right? You can consider that deviation 1. That's the normal range that the market had while it was inside of this fluctuation back and forth. Then we can take this and we can utilize this and say, okay, well, let's deviate this up, right? A standard deviation to the upside. Let me get a horizontal line on here to make my life a little easier. There we go. And we can take this and drag this over and say, okay, well, they tried to get a standard deviation to the upside. It looks like they went for a half, maybe a 618 deviation up and started failing lower. This is where some really key information comes in on IQ, because they tried getting down to a new low and they failed. And that failure to make a new low is huge. That means that if they do push up to a new high, that new high is likely going to be followed up with a secondary leg. New highs after a fail on one end usually come in twos. So that means that this first push up is likely not the end of it. We're going to get a pullback and continuation to another new high. And that next new high is probably going to be a secondary deviation. We've already achieved the first deviation up, right? That was where a lot of profit taking has already taken place. You can see that on that big wick there. So if we utilize this information to our advantage and say, okay, well, we know that this is standard deviation 1. We'll mark this up. If I can grab it, push that higher. And now we're creating a zone of interest further up on the chart that gives us something to work with. So that's kind of the way that we're looking at it and saying, okay, well, you know, I know that we don't have a whole lot to work with. I know that there's not a lot of movement, but we can measure this up and say, okay, well, if a standard deviation, use our little calculator tool, a standard deviation in this case is from 1852 minus 2172. So it's about $3.20. So logically then, if they're following this along, and obviously they are with that big wick on the highs, we can say that another $3.20, right? So 2172 plus $3.20 is 24.92. That's the big area of interest that we're going to be watching on IQ, and that's going to be the upside objective for buyers. We have a single bear candle pullback. Likely buyers going to be buying off of that, and that has actually even created a little bit of a gap there that hasn't been filled. Area of interest, if I do say so myself. That, you know, if they can get a quick backfill and a push back up, that's what we're looking for, right? So we're looking for a rally on IQ up to 24.92. That is the price objective in the near term to break higher and grab that. And that's, I mean, that's a good almost, well, yeah, we'll say $3, give or take some change here, to the upside still from where it currently stands. And it's only a $21 stock. So plenty of upside potential here on IQ, in my opinion. I think it could go a lot further. Objective is 24.92 to the upside. We'll have to wait and see what they want to do once we start breaking out through these highs. So that's the game plan for Twitter. Let's take a look at, or IQ rather, let's take a look at Twitter. Twitter did have a pullback, right? So we were talking about how there always seems to be a lot of weakness on the highs in Twitter. Can't get the job done in one shot, but successive bull candles over and over and over and over and over and over and over again. The first bear bar against that, even though we're seeing a lot of weakness on the highs, is still likely going to get bought. We ended Friday with that bear bar down, and we're opening gap up and running away to the upside. Not exactly a huge surprise. You know, we're putting in low today of 32.93, high at 33.58, so just shy of you know, a dollar move. Could have gone a little bit further, but still, that's kind of the anticipation, is that with that many successive back-to-back bull days, the first move against that is probably going to get bought and pushed back towards a new high. That's exactly what we're seeing here. So pretty straightforward there. Looking still for upside objectives. I would still like to see 35s, and if they can break above that, then up towards 37. Everything is still looking really, really good here on Twitter. We've been a buyer on this since down at 27s, and still rallying up. Looking good. Can't complain. Boeing had some news today, but not enough to really shake things up. It's still kind of pausing and around that major objective area shy of 350. Not really much has changed here. So Boeing did have some minor news today. Not enough to really get anything going, though. Another one on the hot list, Xerox. Xerox has been getting, well, obliterated for the better part of, you know, a couple years now, back when they had that gap down. But Xerox, for the most part, did have a beautiful bear move this morning. We were talking about in the pre-market shorting at around 29, drove all the way down to major support, and that is now bouncing back pretty aggressively. Xerox is on one heck of a tear higher since around 11 o'clock, and man alive, this thing is not taking any prisoners. It is going up very aggressively, so we are cycling off of a major support level on Xerox. And even though the company is kind of crap, I mean, if we're being honest, it does look like they might have a shot at trying to rally up. Maybe to fill this gap above 30 would be the next likely objective. We did gap down from 30, back down. We're now finding major support, likely going to try to rally up. Little side note here. Whenever we have a failure like this, but the bar still closes bearish, that's more of a probe. That's the market testing the lows, kind of poking into them, seeing what they want to do, bouncing back. Okay, not a big deal, but if it still closes bearish, the bears still controlled that candle. Not very well, but they probed the lows. It still closed bearish. So by the end of the day, if this candle still closes bearish, I'm looking for a retest of 2750s first before that bounce back up again. So a little caveat to the game plan here, but the overall objective is to fill the gap at 30. Maybe they can get some legs back to the upside at around 32, but it certainly won't be easy on the rally up there because, well, it's got a lot of problems. So I guess we'll leave it at that. But looking for a retest at 27.50 if today's candle closes bear, and then looking for a bounce back up. But for right now, it looks like they trapped the lows. They probed the lows. It rejected it. Lots of volume coming in as well. So looking for the buyers to potentially rally it back, sellers taking profit, and new buyers coming off of the lows to try to push the market back up again to fill that gap at 30. Well, technically speaking, that gap is at 30.17. So. Let's see, what else was getting a decent amount of movement? Xerox, I think, was the play of the day in terms of overall movement. But a couple other ones, Boxel is catching a lot of movement. I try to stay away from these types of stocks. I think it's a T12 halt waiting to happen. But Boxel is rallying really aggressively to the upside, now back above 10, almost up to 11. And a lot of that happened very recently, right at 1 o'clock. It had a huge spike to the upside. Now it's up almost 60%. Another one on that T12 possibility is IMTE. IMT is another one that seems like a sympathy play to Boxel, and when IMT is rallying higher, Boxel seems like a sympathy play to that. So they do seem to kind of play off of one another. If we look at, this is IMTE right now, if we switch it over to Boxel, you can see, I mean, they look really similar to one another. So it seems like they're kind of playing off one of another, but Boxel is definitely the bigger mover right now. We'll have to kind of keep an eye on it, but I don't like these as long-term holds. I think these are intraday scalpers. Definitely really good potential there, but long-term holds? No. I don't want another LFIN happening. LFIN, if you're unfamiliar, when on a T12 halt, it's now going to be opening up in the OTC markets. Basically zero would be my guess. Traders who were holding LFIN, Long Fin Corp, might be able to recoup something, but no thanks. It would be brave. Yeah, I know, right? Hanging on to some of those, going into a T12. Yeah, no thanks. I don't like losing 90% of my investment. It's not high on my list. Could you take a look at Lotus LTS and Polish Exchange GPW? Sure. Let me take a look here. So Lotus, first up, LTS. First of all, I mean, right off the bat, when I see a market that looks like this, it's obviously strong. There's a lot of bullishness to the upside, and even though it's only a $3 stock, or, you know, you go back a couple months, a sub 3, almost sub 2 earlier in the chart here, this is a really good looking chart. I mean, how do you get upset by a chart that looks like this? You know, it's a really wide bull channel, sure, and at one point it was a little bit tighter, but now it's just a multi-tiered channel. We're near the highs of it, so I don't necessarily know that I'd want to go long anymore, but this is a really strong stock. And this goes to show us that even with these big snaps down, it's still getting bought up really aggressively. Zoom out to a weekly chart. Yeah, that's fine. We can get a little bit of a clearer picture. So, you know, looking at these weekly charts of Lotus, we can see that there is a potential for a lot more up. Well, I say a lot more. I mean, it's only a $3 stock, but going up towards $4.50 wouldn't hurt that much. It definitely looks like it does have the potential. There's a lot of failure down here. Huge twin reversal off of that, and they couldn't even get enough to pull back. So, you know, that's something that I'm looking at when I'm seeing this kind of a strong stock after a huge failure on the lows and seeing good continuation to the upside. I wouldn't mind buying pullbacks. And I say buying pullbacks because this looks like it's getting a little bit exhausted, right? We have a strong, persistent rally to the upside. We're cycling in towards the highs of that and seeing a lot of profit taking. So I wouldn't want to buy way up here, but I wouldn't mind buying on a pullback down towards 310. You know, maybe by the time it gets there, it'd be around 320. But seeing a pullback back towards the lows of the channel, something, right? Some kind of pullback. You got to be careful buying too high when the markets look like this, because it could just end up being buying the top and then having to hold for a month and a half before it comes back just so you can get out at break even. Yeah, that's not really what I want to deal with. So I'd rather buy a pullback. Nearest area, most aggressive area of support is 333. Better area would be back towards 3 down to 280. So definitely one of interest there in LTS on a pullback. The other one, GPW. GPW, let me go back to a daily chart. It's on a Polish exchange, so it doesn't look like I can pull it up on here. Let's see here. Let me drop, I want to keep an eye on Boxel. Let me drop this out of the way, see if I can pull it up on TradingView instead. Let's see. This one? Yeah, let's Let's give this one a shot. Yeah, you gotta make it hard, right? Oh, I gotcha. Oh, I misread. I was gonna say nothing's popping up. GPW is the exchange. Okay, see, I don't have a whole lot of experience trading outer U.S. Exchanges, so thank you for the clarification. I would have spent the next 20 minutes trying to figure out what the heck you're talking about. Like, nothing's happening. I don't know. Gotcha. Thank you. Yeah, so LTS, I mean, I would definitely want to keep my eyes on LTS. It's looking pretty good. Yeah, no problem. So feel free to type in any other markets you want me to take a look at, and then we will wrap it up for the day. Let's see. Anything else moving? WRD? Boxel's the only thing that I can really see that's jumping around. The problem with Boxel is it has like a 20-cent spread. A little bit tough there. IMTE dropping off the highs. Boxel correlation might pull that down a little bit too. NXPI, holy mother. Noon, NXPI caught a heck of a lift to the upside. Now it's up 13.5%. That's a $112 stock. Wow. Can I have one more question? Yeah, definitely. Type it in. I'm just going through the list, seeing if anything looks interesting. Helios and Matheson, yeah. Oh man, Helios and Matheson, what a train wreck. Just a little while ago, I was trading HMNY at $4, and I look at it today, and it's at 72 cents. Yeah. Perfect. Neo and ONT. Yeah, let me take a look here, get TradingView back up. So, just as a side question, are there any specific exchanges that you want me to look at those on? Neo BTC on Bittrex as an example compared to, I mean, the prices will all be relatively the same, but you get the idea. I don't know if there's any particular exchange that you like, but in terms of Neo versus Bitcoin, I mean, it's pulling back. This is a large area of interest, but for me, I'm not interested until it dips below 7s. I want to see 657, preferably, somewhere around there. But Neo on Finex, okay. Versus the US dollar or Bitcoin? Neo versus the US dollar. God, I can't believe Neo's trading at $70 still. I remember first looking at Neo back when it was in the 20s. Of course, I remember looking at Litecoin when it was at like 4, so... It's just so ridiculous seeing how far they've come and how irritated I am at not just holding everything. Sell the house! Put it in Bitcoin! Maybe not anymore. So, I mean, overall, you know, Neo is one of those markets that has a drastic pullback off the highs. I mean, obviously, off of the highs being down, putting in a top at nearly 200. I mean, it's hard not to be upset, even where it is now at 67. You know, if you were, especially like you were saying, you bought it at $5 on that flash crash, I'm assuming you're probably talking about this guy right there. You know, those types of things where you get those quick snap entries like that. I mean, that's where emotion starts setting in. You know, from a psychological standpoint, from a technical standpoint, selling anywhere, you're going to be at a monstrous profit. But it's almost difficult because it's so difficult to lose money regardless of how long you hold that you almost want to just hold it forever, you know, and wait for it to go back up to 200. And even if it goes back down to 10, you're still doubling your money, you know. So it's one of those things where it's definitely a little bit of an emotional roller coaster. But if you're still holding some from 5, that's one of those psychological things that you really got to overcome. You know, it's you can just hold on to it forever. You know, I bought it at 5, it's at 70. You know, what's even if it drops back to 10, still doubled my money. You know, so where it is right now, I think it's in a situation that is running into previous structure. Right, we had a lot of structure on the previous swing highs. They used it as a swing low, and when they tried to come back, they missed it. And I think that's a big thing to keep an eye on. As long as that, you can kind of think of it as a gap, right? That little gap that they left behind there. As long as that gap stays open, that's a big deal because buyers are still showing that they're defending it really aggressively. We saw defense, really aggressive defense coming in here, not so much here, but rallied back up just the same, right? So, I mean, that's the one thing that I'm looking at on this is this could easily just be a pullback that buyers are buying into to try to get another rally up. This is the first time that we have broken a previous swing high, a major swing high, and are now attempting to hold a higher low. This is where trends begin reversing. If this breaks a new high, that's where the trend is officially technically reversed. So looking for a bull rally above that, back towards 100 and then higher, is where a lot of trend traders are going to be looking for the trend reversal. For me, I see something like this as a potential buying opportunity on the inside swing, which is what it's sitting on top of right now. If it does dip a little bit lower, then the next inside swing at 50. So that's kind of what we're waiting for right now. Long-term traders are going to be waiting for a breach of this high that was put in. Short-term traders are going to be looking to accumulate on these pullbacks. Around the $50 mark and around the 66 area, give or take, give or take some change. Those would be the zones that I would be watching on NEO. ONT on Binance. Let's take a look here. Oh, God, I hate seeing these. ONT is a tough one. And the reason I say I hate seeing these, when they have that start, they always have this crazy, wacky candle that starts the day off. Look at Tron, TRX, BTC, we were looking at on, I believe, Bittrex way back in the day. It had the same thing. It had this monstrous, just gigantic candle. At one point, it was worth 1 Bitcoin per Tron. Yeah, okay. Obviously, that sold off really aggressively. But once you get rid of all of that kind of crap, then you start getting the normal movement. So even though we're in a situation right now where we don't really have enough to consider normal movement, there's still enough to at least look back and say, okay, well, obviously this didn't start at 1 Bitcoin like Tron did, but we have a level of resistance. It's a very obvious level of resistance, which is going to be right there. That's at 001. Every time the market's tried to break above that, it has failed. Every time it's come back to it after that failure, it has rejected. So as long as this level at 001 is there, I'm going to have a hard time wanting to buy when it's too close to it. Right? So instead, looking to buy previous swing high tests, swing low trap, whether maybe you like Fibonacci levels, I don't know. But I wouldn't want to be a buyer way up here. I think it's a little too close to major resistance for comfort. You'd rather be buying on dips. So I think it's a dip buy only kind of market on ONT. Got the same problem with ONT. Got 3,000 for free. You got 3,000 for free. Well, I mean, yeah, at that point it's going to be it's going to be a little bit tough in terms of the emotion because you literally will lose nothing. It doesn't matter where you sell it; it's going to be a profit. So, I mean, in that regard, I would. I mean, again, I'm not a financial advisor, so I can't tell you what to do with your trades or your money. But it's something where I just hang on to it. Maybe if we start breaching above this, if we start pushing back into the highs, it's a partial profit territory, maybe. But you got them for free, why not just ride the roller coaster and see what happens, But partial profits, maybe if you want to bank something. A lot of times, just as a side note from a psychological aspect, taking partial profits eases the emotions a lot, right? When you've taken something off the table, right? That's where things get a lot easier. So, I mean, it's one of those things where, yeah, it's running into resistance, but this could easily break out and go another 300% up, So, I mean, if you're holding a large enough, and that's the next thing as well, Bartos, exactly. It's one of those things where if it starts generating a quote-unquote dividend like NEO with gas, you might as well just hold it, right? I mean, if it's going to generate free money for you for holding on to it, maybe, that would be one that in your specific situation at least, if it were me, right, and again, I can't tell you what to do, but if it were me, I would look at it and say, well, I got these coins for free. They're going to start generating a dividend. Maybe I'll start DCAing into it, right? Dollar cost average into it. I got an extra $5 or $10 because I didn't go to McDonald's. All right, we'll buy a couple extra coins, something like that. I think in that type of situation would be the better way to play it because it's a longer term hold at that case. It's something that will be generating a dividend and you got most of it for free anyway. So it's kind of a win-win, So, but for me, from a technical standpoint, this would be something that I wouldn't want to buy where it is now. I would only be buying on pullbacks. Next viable pullback would be around 0007. If it can break above 001, then, just like we were looking at on, what was it, IQ, utilize this first candle as a deviation measurement, right? Very easy. All you got to do is put a box on it, draw from low to high, right? Make sure it's on the high, and then use this as your deviation measurement. Say, okay, when it gets to the next deviation, that's a potential partial profit-taking area. That's not all the way up until 0018. We'll just say 19. But for right now, I think it's pullback only. So hopefully that helps. All right, and that's going to do it for today. So overall, decent day of movement. Not a ton, but at least things were moving a little bit. Fingers crossed tomorrow with some news we'll be able to get something else going. But definitely a good scalping day at the very least. Aside from that, though, as always, if I missed your question, feel free to send me an email. We know what the news is for tomorrow, so make sure to have that on the calendar. Get ready for it, because there is a lot of news across multiple countries tomorrow that can definitely shake things up. So just be prepared. And like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be okay. Until next time, feel free to send me any emails if I missed any of your questions, or if you have any questions in general. Make sure to click on the subscribe button underneath the video. To the right of that, click the notification icon so you'll be notified every time we go live. We go live Monday through Thursday at 1 p.m. Eastern. So rest up, enjoy the rest of the trading day. Hopefully you have a great trading day tomorrow, and we will see you all back tomorrow going into another live analysis at 1 p.m. So enjoy, rest up, and we'll talk to y'all later. Thanks.